Cypress Development Corp. is developing a world-class lithium resource in the heart of Clayton Valley, Nevada. The size of the resource makes the Clayton Valley project a premier asset with the potential to impact the future of lithium supply. Cypress Development Corp. trades on the TSX Venture Exchange, symbol CYP, the OTCQB, symbol CYDVF, and on Frankfurt, symbol C1Z1. For more information, please visit our website, cypressdevelopmentcorp.com.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Ted Dixon, CEO and co-founder of IncResearch.ca. He invented the Inc. Canadian Insider Index, which is used by the Horizons Canadian Insider Index ETF, a 2017 and 2018 Fund Grade A Plus award winner. His website, CanadianInsider.com. We're about to all say Happy New Year, Ted, and Happy New Year, and hope Santa was great to you.
Well, Santa was very good to me, and I hope he was very good to all your listeners, and Happy New Year to everyone listening to HowStreet.com. We'll see who's going to be in the good books and in the bad books in 2020, but it's certainly going to be, I think, a very good book, bad book year ahead of us, that's for sure.
Ted, taking a look at 2019, somebody said to me it was a great year for stocks, but is that because the year started off so poorly?
Exactly. It was a very low base that 2019 started from after the big late December 18 sell-off. And ironically, it was what I would call sort of a year of walking through a gray fog, in that there was so much uncertainty that it allowed, the market to climb a wall of worry as the Fed pivoted and became more accommodative in its monetary policy and took away some of the restrictions that it had put in place the year before. But, it really was a year for those worry wall climbers. It was, will the Fed cut the rates? How much will they cut? Will there be a Brexit? Is there going to be this trade deal? I mean, it was worry, and stocks went up. So that was it was a year of worry and a year of gains in the stock market. Not sure we're going to see the same scenario unfold in 2020, though.
Did you expect Boris Johnson to win his election and by such a landslide? Well,
in the hindsight of 2020, pardon the pun, it's easy to say yes, but the landslide, not necessarily, but I did expect him to win only because look who he was running against, and so yes, I did expect him to win, and I think having Brexit done is good only because, well, two reasons is good. It's good because we don't have to listen about it anymore every day, and secondly, it allows some evidence that this is not the end of the world to actually kind of come to fruition. You're actually getting some decent headlines out of Brexit that, for example, the Japanese have said they want to cut a trade deal with the UK. And so, not just Americans. So, there are some positive headlines now coming out of this, whereas before it was all, how bad it was going to be. And, so it's good that it's done. And, so that will likely be a positive impact on the market. And we've had Brexit. So that's a big change from 2019. Well, I shouldn't say we've had Brexit. We've had a decision that there will be a Brexit. The actual details have to be worked out, but the market's not really going to care about that except, in little bits of parts of the market that could be impacted by certain parts of the deal, but generally speaking, it's done, and now it's on to some fun.
Does Canada have to work out a trade deal with the UK right away, or is it a priority?
Well, trade deals should always be priorities if they're real trade deals. And I mean by that, where they're actual free trade and not managed trade. We'll just have to see where it lands in the pecking order of both countries. At this point I don't know, but I suspect what will happen is there'll be one of the major economies will do a trade deal, and that will become the template. But you never know. Canada could end up being one of those, being a template. We're pretty good at these trade deals, and we don't see ourselves that way, I guess, enough, but we are, and Canada is one of the freest trading nations in the world, so it's not impossible. But in terms of where it would stand in the pecking order, I don't know at this point, but it could happen, sure.
Well, I think we did a story, Ted, about out of the G7, Canada's got the most free trade agreements, or free-ish. Nothing's free.
The lowest. We have the lowest tariffs, and that's good, and it's a positive, and it's something that Canada doesn't get a lot of credit for, and internally, I hear no shortage of the problems we have in this country, and we do have our challenges for sure, but on the trade front, we're doing pretty well, and that's going to, that's one factor why the Canadian economy, I think, manages to chug along here, is that we're pretty good traders.
Ted, do you think the new year will see more efforts done to reduce the trade barriers between Canadian provinces, which still apparently cost our economy about $60 billion a year?
Unfortunately, I do not. I'll believe that when I see it. So we're pretty good traders with the rest of the world. We're terrible traders, amongst ourselves. I mean, that's the irony of it all, for sure. Because
you don't see BC wines on Ontario shelves, and you don't see Ontario wine being sold in BC, but we see wines from across the planet here.
Yeah, I know. Well, also, I believe there's a shortage of teachers in BC because of the Supreme Court ruling a few years ago. For those listeners not familiar, there was a court ruling that basically forced the provincial governments and school boards to hire more teachers all of a sudden, right away. So there was no planning in this. It was just like, okay, now you need to hire all these new teachers, and just sort of put an ad in the paper for teachers. But because unfortunately you can't go to Ontario or Alberta and get teachers because they're not accredited here, and that that's a free trade in services. There's a big barrier as well. It's not just wine and other types of prohibited or regulated goods. So we've got a long way to go. And I've heard enough promises in the past on this front, but I see no indication we're going to get our act together on that front.
We'll have more with Ted Dixon right after this.
Media recognition from Bloomberg, Reuters, recycling trade publications, patented process for 100% recovery of critical metals, including cobalt, lithium, nickel, manganese, aluminum. American Manganese is focused on recycling lithium-ion batteries for electric vehicles. American Manganese trades on the TSX Venture, AMY, the US, AMYZF, and Frankfurt 2AM. For more information, visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
Avon Resources Limited is a gold exploration company with significant projects in British Columbia and the Yukon, trading on the TSX Venture Exchange, symbol ABN, and the OTCQB, symbol ABNAF. Surrounded by world-class gold deposits and mines, Avon's 23,000 hectares Forest Kerr Gold Project is located in the heart of the Golden Triangle in northwestern BC. For more information, visit us at avonresources.com.
Welcome back. We're speaking with Ted Dixon. Ted, taking a look at the new year, is this going to be a brighter year with less doubt than we saw in 2019?
I think it's going to be more of a black and white year. And what I mean by that, I think the outcomes and the implications of different outcomes will be pretty clear. So let's, for example, look at politics in the U.S. It'll be Trump or it'll be somebody else. And I think it'll be pretty clear what the implications are of who wins that election. And I think, by September, we probably will have a pretty good idea of who's leading. So, of course, uncertainty will not disappear. We will still have gray situations like, for example, will the Boeing 737 MAX fly again in 2020? I think that's a big gray area, and one will be a big cloud hanging over that stock. But in general, I think some of the big there's going to be a lot of big forks in the road that are going to be pretty clear cut, and their implications for markets and implications for winners and losers. The biggest one will be inflation and inflation expectations. If inflation expectations break out to the upside, and we think there's a pretty good chance that they will, then that will be a big game changer. And what I mean by that is that those stocks that have benefited from this sort of low inflation, low interest rate world that we've been in for the last 10 years, so that'll all be out the window. And in will come a new regime of, pro-cyclical value stocks, and looking for those stocks that have pricing power. And what one of the things that got us thinking about this was what we've seen in the United States in our insider indicators here at the end of the year, where we've seen some momentum, positive insider momentum, in both the energy sector and defensive consumer sectors. And that got us thinking, well, this is odd. How could you have insiders excited about both of these areas at the same time? One is very economy sensitive, the energy sector, and the other, the defensive consumer, is like groceries and the like. That's very defensive. But when you think about it, if you're entering into sort of a stagflation period, that does make sense. You would go into those companies that you believe have pricing power in the consumer area, and often, some these defensive companies where you have to go and buy things, regardless of the price, can pass those inflated costs along to the consumer. And of course, if you're in the energy sector, you're a price taker. So if the price of crude is going up, then you're happy. So very interesting signals coming out of the United States in our insider monitoring. So be on the lookout for that, but it'll have a big implication. If we start to see those inflation expectations move up, it's going to be a major game changer. And whereas in 2019, the whole stock market could sort of climb the wall of worry, and you would of course have winners and losers. Based off of that, you could have a lot of back and forth here in 2020 as people sell their losers and buy new winners or expected winners. You could get a situation where the market doesn't really go up that much or goes down a little bit, but you've got big moves within the market in terms of the winners and losers if we transition to a higher inflationary environment. So it's a big if. But again, I would categorize it as black and white, is that if we get it, then we're going to have a group of winners that you can pretty much identify who those are going to be. And we don't get it, we're going to have the same kind of winners that we've had over the past 10 years, big tech, defensive, dividend payers, utilities, those will stay in fashion. But if we get a breakout in inflation, it's a whole new ball game. Miners, energy companies, and those companies with pricing power are going to be the big winners. So, it could very well be sort of take no prisoners type of market where you're either on the right side of inflation or the wrong side. And it could still go either way. Well, we think inflation could break out here. Recent history is not on our side. If you're sticking with recent history, the bet is that the Fed will fail to generate inflation expectations, and that it'll be more of the same. So, but black and white, we'll be either right on that call, or we'll be dead wrong, and the implications will be significant one way or the other in terms of investment returns.
We'll have more with Ted Dixon right after this.
Engineer Gold Mines is focused on the exploration and development of the historic high-grade Engineer Gold Mine situated 32 kilometers southwest of Atlin, British Columbia. Engineer Gold Mines is fully permitted for surface and underground exploration with the 2019 drill program now underway. Engineer Gold Mines Limited trades on the TSX Venture Exchange, symbol EAU. For more information, please visit us at engineergoldmines.com.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com.
Welcome back. We're speaking with Ted Dixon. Ted, the biggest winners, the biggest losers of 2019. Who was the biggest loser? Or what was?
Oh, I don't know. CNN ratings, I don't know, with their nonstop coverage of Trump and impeachment, and it was Mueller still on in 2019? It sure seems like it. And then, then something else came up. I mean, anyway, so I think 2020 will mercifully provide a change. The impeachment thing will be, I think, dispensed with pretty quickly. Again, that's that's going to be I think a political nothing burger, but and a market nothing burger for that matter. But in terms of the winners, I think that we've got a lot of things to be thankful for in terms of what's happening in Canada in 2019. We got the U.S. Mexico Canada trade agreement. I maybe I've got the title wrong, but anyway, NAFTA 2.0 appears more or less done, and we've kind of had a decent year in this country in terms of getting through. It could have been a really challenging time. Yes, growth could have been better, but look, the job market in Canada, despite that 1 month where we had a give back, which was to be expected, the job market's doing pretty well, and we've managed so far to avoid a major downturn in housing, and that's so just on that front, I would say it's been a winning year for Canada. If maybe not a gold medal year, but certainly things could have played out a lot worse. And 2020 is shaping up to be pretty good for the Canadian market if the Fed stays course here and keeps pumping the financial system with liquidity. It could be a good year, but we could see a change. We could see the return of the oil patch, and we could see some consumer type stocks and consumer companies who don't have pricing power kind of lag here. So it'll be an interesting year, again, fitting with the theme of inflation kind of deciding who the winners and losers will be. I think we'll see that play out in Canada. And in Canada, we do have inflation. I continue to hear about these predictions that the Bank of Canada is going to cut rates. Okay, so let's just put this. I'm not going to make too many predictions here, but I'll make this prediction that the Bank of Canada will not be cutting rates in the first half of 2020, right? Unless there is a major economic downturn. And I mean major. I mean out of the blue shock that there's some global event that the oil price crashes beyond anyone's expectations. The Bank of Canada is not going to be cutting rates, and that will support the Canadian dollar, and the Canadian dollar will likely surprise people on the upside in 2020. So it wasn't a big winner in 2019, but it's set, I think, to have a better year in 2020.
Ted, don't let the champagne corks hit you in the eye.
I'm pretty good, Jim. I wasn't around in the duck and cover days, but I've seen enough of those old school duck and cover videos that come in handy on New Year's Eve, of course.
The best of the new year, Ted.
Happy New Year to you and all your listeners, and we'll look forward to talking to you in 2020.
My guest has been Ted Dixon, CEO and co-founder of IncResearch.ca, his website, CanadianInsider.com. If you have any questions for Ted or any of our other guests, you can send them to info@HowStreet.com. Our YouTube channel is Talk Digital Network. Find us on Twitter @HowStreet, and we're also on Facebook. Happy New Year, everybody. I'm Jim Goddard.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at talkdigitalnetwork.com. HowStreet.com Radio is a production of How Street Media Incorporated.